Okay, let's get started. Welcome to all of you here in Morningside Heights at Columbia School of International Public Affairs. Welcome to the many people also watching online right now through our live stream. My name is Jason Bordoff. I'm a professor here at Columbia's SIPA and direct the Center on Global Energy Policy. And really delighted we have a great lineup of actual Europeans to talk about what's happening in the European natural gas situation, policy, and what the market outlook is and geopolitical outlook is moving forward. We were here, many of you, some of you were here last week when we hosted an event to discuss how the LNG markets are changing, release a new book by some friends of ours at Oxford and at CAPSARC about how the global LNG market is going to look different moving forward. That is one of, not the only for sure, but one of the factors that has enormous implications for the European market. A flood of low-cost US gas coming into the European market, questions about how Gazprom and Russia will respond to that, questions about security of supply, a very different price outlook for European gas than we've seen before, questions about how climate policy in the US, in Europe, is being shaped and formed, what impact that'll have on natural gas. We've seen climate policy support gas demand or squeeze gas demand, depending on how it's designed and structured, and we're going to talk about that. How the EU in Brussels is responding to concerns about climate, about security of supply, the efforts they're taking to build new infrastructure and pipeline interconnectors throughout the European region, and what all of that means for energy markets, for gas demand, gas supply, global LNG markets, and climate efforts to address climate change and implement the Paris Agreement, which was ratified yesterday, came into force yesterday, moving forward. So to talk about all of that, we have really a fantastic lineup of people with deep expertise in this area. We're delighted to have with us in New York today, from very far away, Dr. Pierre Noel, who's a senior fellow for economic and energy security based at IISS-Asia in Singapore. Focuses his research on energy market and policy dynamics in Southeast Asia, the changing natural gas market in Europe and elsewhere, has a very interesting new article that we'll maybe talk about in Q&A about the outlook for the oil market, the role of US shale, and some discussion of what's motivated Saudi oil policy recently. So Pierre is very highly regarded as one of the leading analysts studying a range of issues in global energy markets, oil and gas markets, and energy trade. Tim Boersma, very excited to have him on the panel as the newest addition to the team here at Columbia. He's a senior research scholar at the Center on Global Energy Policy at SIPA. He directs our global natural gas research program. And before that, he was the acting director of the Energy Security Initiative at the Brookings Institution, and earlier in his career worked in the energy private sector in Europe. And then Leslie Palti-Guzman is also a non-resident fellow at the Center on Global Energy Policy. She is the director of global gas at the Rapidan Group, a energy consulting and research firm based in Washington, D.C., has many years of experience as a gas research analyst and journalist and political risk advisor, and previously was with the Eurasia Group. So I am going to turn it over to Pierre, and then to Leslie, and then to Tim, and then we'll have a conversation. Thanks all for being here.
Thank you very much, Jason, and good morning, everyone. As Jason alluded to, I'm based in Singapore. I've been there for nearly 4 years now. This panel actually brings me back to my former, what I used to concentrate on, I would say, and I have always kept an eye on, at least on aspects of it, but this is no longer my primary field of work. That said, I think it's very important, and it's been changed, it's been transformed quite profoundly over the past few years. So I'm pleased to go in just 4 slides through some of what I perceive as either very important or aspects of it where there are quite a few misconceptions in the general public discussions. So the first idea I would like to put forward is that Europe does not depend on Russian gas in any meaningful sense of the term, by which I mean that the fact that Europe consumes a lot of Russian gas actually has no real debilitating foreign policy implications. First of all, the share of Russian gas in European gas imports has been going down for decades, not just a few years, but actually decades. In terms of gas consumption, which is the middle red line, it's been roughly, slightly declining, roughly flat for many, many years. And as a share of total primary energy consumption in Europe, it's been flat at about 7% forever, essentially. So if you want, 93% of primary energy that's consumed in the EU 27 countries is not Russian gas, let's put it like that. That said, the picture is diverse across Europe, and that's the bottom of my two graphs here. On the x-axis, you have the volumes of gas imported. Those figures are slightly outdated. As I told you, that's what I used to work on. But it's not changed dramatically. It's changed to some extent. On the vertical axis, you have the rate of dependence on Russian gas, Russian imports as a share of total gas consumed. What is very interesting is the combination of the map and the graph, because as you can see, the countries who have a higher rate, a relatively high or very high rate of dependence on Russia, they're all on the in Central and Eastern Europe, where precisely I would say the growing competition and trading in natural gas over the past few years has not spread, or has spread, to a much lesser extent than it has in Western Europe. So most Russian gas that is exported by Gazprom to Europe is consumed in very big gas markets in Western Europe. They tend to be very diversified and very diversified and actually quite well connected to each other on the one hand and to the global LNG market on the other hand. So most Russian gas is actually consumed in countries that are not highly reliant on Russian gas, or where Russian gas is actually very contestable, can be displaced at very low cost by other gas. I think it's very important to understand that. If problems there are, the problems are in small gas markets in Central and Eastern Europe. So let's look at those. The plan that has been put forward, publicized, and maybe they tried to implement by the European Commission for many years now is we're going to build this pan-European gas market so that countries everywhere in Europe, including Central and Eastern Europe, are going to be included in this wide, competitive, diversified Western European gas market. Well, that has not worked, or not worked well, let's say. For some countries, the most problematic ones in terms of Russian gas dependence, such as Bulgaria, which my bottom slide is about, or the Baltic states, which as my top graph is about, there's very little prospect to bring them into a competitive gas market. But that doesn't mean that nothing can be done to address the problem. A lot can be done, and these are the results, some of the results of studies I done 8 years ago now, on the Baltic states on the one hand, on Bulgaria on the other hand. So the top graph is simply, what would it cost to build LNG terminals in the Baltic states that would allow them to either to have an alternative if they are cut off, or just simply not to renew the contract with Gazprom and move to other suppliers. And the results we found, around which there's a margin of errors, but basically the security premium is about is between 7%, between 6% and 10% of the wholesale price of gas. Well, this is a commodity, the price of which goes up and down by much more than that. So, the price of security is limited, is relatively small. On Bulgaria, we did something slightly more sophisticated. We tried to rank the gas supply security options it's essentially a cost curve for security. So you have you have on the y-axis you have the price of security per unit of gas consumption that is insured by this policy option, and on the x-axis you have the actual amount of gas consumption that can be insured by each policies or measures. But the conclusion of that study was roughly the same as in the Baltic states. It was slightly more sophisticated in the sense that if they don't want to insure 100% of their gas consumption, then it's very cheap. If they want to insure 100% of their peak gas consumption, which is the dotted vertical line over there, then you're talking about a very manageable security premium. So it's really like buying insurance. If they fear about being cut off, it's cheap. Just do it. Just do it and stop, mobilizing the entire Washington think tank scene to try and lobby the powerful countries in this world to build the NATO for energy or whatever. Just, stop that and address your problems with policies and measures that you actually are in control of. This message has not gone down well in Europe, but we're not in Europe, so I'm pleased to reinforce it today. The other big thing on which there's a lot of misunderstanding and which is, I think, much more problematic is Ukraine, of course. So I will be brief, but we will come back to that, I'm sure, in the Q&A. Ukraine has abused its what used to be a highly dominant position in terms of transit gas, and it's abused it to get cheap gas from Russia. Well, you could say, well, that's Russia and Ukraine's problem. Except that the way Ukraine used to play this game is by implicitly taking Europe hostage in their bilateral negotiation with Russia. The cumulative amount of subsidy that Ukraine got from Russia over the years is the vertical blue bars there, which cumulatively reached $17 billion in 2010, 2011 when it peaked. Of course, as these levels of subsidies rose and rose and rose, the difference between the gas price in Europe and the gas price in Ukraine got very large, and Gazprom started to say, that has to change. We have to bring this difference down. We cannot afford to send cheap gas to this massive energy-consuming country that is Ukraine. This is what triggered the crisis of 2006 and then the much more severe one of 2009. The 2006 crisis did nothing because Russia actually, they bowed to the pressure, or they actually did not want to risk their reputation by triggering a real crisis in Western Europe. In 2009, they decided to go fully down the road to a very severe 15-day crisis, but they got what they wanted, which was a contract that actually equalized prices in Ukraine and in Germany, as you can see. Then the Ukrainian price goes above Germany, and that's a reflection of the fact that the Western European gas market had access from 2008-9 onwards to much cheaper gas than oil index Russian gas. So the average price in Germany, even the Russian price in Germany, started to go down, which was not the case in Ukraine, because in Ukraine there was no competition. In the face of such Ukrainian behavior, Russia and their European partners started to build infrastructure to bypass Ukraine, Nord Stream, and then planned South Stream. So I replaced South Stream by 3 question marks, because, as you know, South Stream has been shelved, has been cancelled, replaced by Nord Stream 2, which is now, I think, called into question by the fact that the Turkish option, which is some kind of a revised version of South Stream, is being revived by the resurrection of the Russia-Turkey bilateral relationship. So we shall see, but I think really that this momentum is not going to abate. I mean, we're not going to go back to the old days. I think Ukraine will be eventually completely bypassed, and that it's fully in the interest of both Russia and Europe to do that. The final slide is about the economics of gas in Europe, which has changed quite dramatically. In the old, because I mean, actually, eventually this is what is deciding and will be deciding how much gas is consumed in Europe. In the old days, you know, the way the gas business was built in Europe is it has those large, very inflexible pipeline import contracts, and the price of gas was indexed on oil because there was no real gas market that you could talk about. And the way they designed the formula is they made gas just slightly cheaper than oil products and permanently cheaper than oil products because it was indexed on oil products. So you make it permanently slightly cheaper than the fuels you want to displace, and it works marvelous. And the share of gas in Europe went from 5% in 1965 to 25% of primary energy consumption in 2005. That worked brilliantly. The other thing that this graph tells you, I mean, actually the main thing that this graph tells you is the ratio of crude oil, which drove through this indexation formula, directed the price of gas and coal. So as you can see, during what we could call Europe's golden age of gas, oil was relatively cheap compared to coal, in comparison to now, to the past 10 years. And this, of course, also was very good for gas. Gas became then, oil, and then and therefore oil index gas became much more expensive compared to coal in the recent period, which of course was not good for gas. But the new world is the right-hand side of the graph, of the slide. These economics have completely changed. Now those oil indexation formulas have almost disappeared, at least in the big markets in Western Europe. And now it's really about what they call the spreads. So in at least for the electricity industry, where most gas consumption growth has come from over the past years. So what they call the spread, we've got the clean spread. The clean spread is the difference between the price of electricity and everything you need to generate it, which is fuel, and paying the carbon price. So gas plants are more efficient than coal plants, and they, of course, emit less carbon per unit of electricity. So the higher the carbon price, the better it is for gas relative to coal, everything being equal. But everything is not equal because the prices of coal and gas are not indexed on each other. They move in different directions. So the big space that, these are not my charts, these are charts from Timera Energy, a consultancy in London. The big space that opened in the 2010s between the red line and the blue line on the top chart is this terrible period for gas, where people made a lot of money burning coal and actually zero or even negative returns burning gas. Recently, this difference between the clean spread and the clean dark spread, which is coal, and the clean spark spread, which is gas, has collapsed and gone to zero, and in the very recent period reversed. So gas is back into the money in European power. And the forward prices, which is the right-hand side of the graph, tell you that, I mean, at future prices today, gas should be relatively competitive against coal going forward. The bottom chart shows you that this is not true equally in every country. On the left-hand side, you've got the UK. On the right-hand side, you've got the Netherlands. In the Netherlands, all these small dots are above the lines. The lines are the points at which people shift from coal to gas, depending on the prices of coal, gas, and carbon. And the reason is that in the Netherlands, the price of electricity is set by a cheap lignite plant in Germany, and there's no carbon price support. There's just the European ETS price for carbon. In the UK, the electricity plant that sets the price is a gas-fired plant on the one hand. On the other hand, they have put in place a quite ambitious carbon price support scheme, which of course, helps bringing gas into the money. So these economics have completely changed in Europe. This is now what people really have to look at if they want to understand the future of gas, plus the fact that renewables depress power prices. So that is shown by the fact that those lines, especially the gas, the clean spark spread line, is almost permanently very close to zero. In other words, if you want to burn gas, you not only have to be more competitive than coal plants, you have to be above zero. Nobody's going to run a plant that actually loses money, doesn't cover its marginal cost. And more in Europe, because of the very aggressive deployment of renewable generation, power prices are at zero or even below zero, because renewables are allowed to bid the inverse of the subsidy. So they bid negative prices to these competitive markets. That is a big problem, not only for gas, but for everybody else. And that calls for a significant change in the market design, which people are thinking about, because it's not only bad for gas, it's very dangerous for security of electricity supply. That's it. These are the conclusions. You can look at them. I'm not going to repeat them. 4 slides, 4 conclusions. I hope what I said was clear, and I certainly hope that there's some disagreement in the room so that we can have a nice discussion afterwards. Thank you.
Thanks, Pierre. So a lot of stuff to talk about in the conversation there. I want to make sure we leave enough time for conversation, so I'll ask people to keep their remarks proportionate to the distance they travel to be here. So Singapore, and then Leslie's firm is in DC, and then Tim's is down the street. So let me turn it over to Leslie.
So I think there is a big consensus view in the market right now that Europe is going to receive LNG cargoes, plenty of LNG cargoes in the next 5 years, no matter what Europe is doing. Why? Because the global gas market is oversupplied. But I would like to challenge this consensus because it's the expectation that Europe would receive a lot of LNG cargoes is not based on increased gas demand, but it's more based on the fact that LNG cargoes have nowhere else to go right now, the fact that Europe has plenty of available regasification infrastructure, and the fact that there is so much supply around that, even with low European prices, it's better than having nowhere else to go at, $0. So basically, I'm going to discuss EU LNG demand and whether there is a need for more LNG, LNG supply, and where supply to Europe will come from, and then some geopolitics for potential new suppliers to Europe. So why there is this expectation that there will be more LNG coming to Europe? The main reason is because there is a declining indigenous supply in Europe, mostly from the Netherlands and from the UK North Sea. So there is a growing need for imports in Europe. And those imports can come either from pipeline gas or from LNG. So the EU is expecting this import dependency to reach 65% in 2020. And that creates security of supply issue and diversification of supply issue. The EU Commission has released an LNG strategy that Tim will discuss later, And there is a huge emphasis in this LNG strategy about the role that LNG should play in Europe, because it will reinforce the EU internal market rules, strengthen cooperation between partners, and support LNG also as an alternative transportation fuel, which is an interesting element that I will discuss later. But there is still a lot of uncertainties from the investors and the utilities, but also national governments. To what extent can they rely on LNG as a secure supply, but also to achieve like a cleaner energy mix? From what Pierre Noel discussed earlier, I think the trends for 2014 and 2015, we saw a shift. And there is a really growth of import dependency from Russia that is growing. In 2015, we saw the number increasing. Like overall, there was if you look at the top 10 European countries, imports from Russian gas increased by 13%. And for total of Europe, it increased by 11%. But the call on LNG also increased. So we saw both huge increase on both Russian gas and LNG imports in 2015. And the trend is continuing in 2016. So I was discussing earlier this consensus view that no matter what Europe is doing, even if they don't put their act together politically, LNG will flow to Europe because there is so much LNG right now in the global gas market. There is an oversupply market. The big historical Asian consumers have a slowdown in their demand, namely Japan, but also South Korea. Last year, there was a big economic slowdown in China that has impacted Chinese LNG demand. And there is so much supply coming from Australia, now from the US and other countries, that basically there are cargoes right now that don't know where to go. So there is this assumption that Europe will be this market of last resort for big suppliers that have nowhere else to go. But as I was mentioning earlier, it's not based on an increase of gas demand, because gas demand in Europe, since the financial crisis and the fact that there is so much competition between cheaper coal and greener renewables, in a way, gas has been displaced in Europe. And the trend is not yet towards increased gas consumption, but towards increased imports. So three things can happen for the consensus view not to occur. One is that there is so much gas-on-gas competition between pipeline and LNG, and right now there is what some analysts call the price war between Russian gas and LNG, that LNG is going to be displaced by Russian pipeline gas. Second, also interfuel competition. So I was mentioning coal, but also renewable are displacing potentially gas and LNG. Third is that there is so much positive demand shock elsewhere due to low prices that we will notice higher demand than anticipated in other markets. Like right now, there is an increased call on LNG from South Asia, or new markets emerging in the Caribbean and South America, or even West Africa. So in the next 5 years, those markets are really going to be important to watch, because it's going to determine what eventually would come to Europe. Because historically, Europe has only attracted cargoes if either its prices were higher than the ones in Japan, for instance, or if there was so much supply and nowhere else to go, Europe was providing a home for those cargoes. And third, the market may rebalance faster than everybody may anticipate. Right now, I don't see any, major geopolitical risk that could impact supply, or I'm anticipating the market to rebalance potentially next decade, towards the early first half of next decade. But right now, there is nothing really that make me believe that the market could rebalance faster. However, this is something to watch also because it will impact the amount of supply available to Europe. So longer term, the call on LNG in Europe will depend on Russian pipeline politics and how Russia is fighting back for market share. It will also depend on the willingness, political willingness of national countries and the EU to diversify away from Russian gas. And it will also depend on whether we will see an impactful carbon price, which in turn will impact the demand, coal demand in Europe. One dimension where I think, even if industrial gas demand or power consumption demand is not increasing, at least in the maritime transportation sector, the use of LNG will increase because it's not really driven by prices, although prices help, but it's also driven by environmental consideration. So right now in Europe, there is about 200 BCM of regasification infrastructure. Clearly, Europe doesn't need more LNG infrastructure. And most of this infrastructure is only utilized at 20-25%. So now what Europe needs to work on is a better optimization of those infrastructure and better interconnection to connect all of those. However, there are still some isolated markets in Europe. For instance, Malta and Gibraltar will get access to LNG in 2017. Those are tiny, tiny markets. And it's not really a big success, I would like to say, for suppliers that are desperately looking to open new markets, but at least it's 2 new markets that would get access to LNG. The Baltics are still looking to increase their regasification capacity, and also Croatia. So that's the potential new LNG markets opening up to Europe in the next few years. But beyond that, I think Europe has plenty of infrastructure to receive LNG. So the bunkering sector offers promising upsides for LNG demand in Europe. The port of Rotterdam had just opened bunkering services. And basically, several regasification terminals in Europe are trying to diversify their services offering. They are not much utilized, so they are looking into offering bunkering services, reloading services, storage services, and basically, the bunkering is gaining traction mostly because of regulation. First, at the EU level, clearly at the EU LNG strategy level, there was a big push for the use of LNG in transportation. Also, so in some directives previously and at the EU LNG strategy paper, but also because of the International Maritime Organization, which is expected to come up actually in several weeks now, or 1 or 2 few weeks, with new regulation to curb sulfur emissions. And Europe is taking the lead, basically, and even if the International Maritime Organization doesn't rule in favor of curbing more sulfurs, the EU will still go ahead with more stringent regulation. So that's clearly something to watch for an upside of LNG demand in Europe. And this impacts LNG tankers, but also ferries, cruise ships, container cargoes, and most of European waterways, so inland waterways. The Danube right now, for instance, is mostly completely switching to the use of LNG for propulsion fuel. So we've discussed the fact that Europe is increasing its import dependency, and this will rely mostly on LNG or Russian gas, because all the historical suppliers to Europe, such as Algeria, cannot increase their export capacity. They have so much growing domestic needs and limits on the supply side that the option is not available. For Qatar, Qatar has clearly ample supply available at very cheap prices to come to Europe. However, Qatar has decided right now to prioritize new niche markets in South Asia and the Middle East. So Europe for Qatar is clearly the default option. And when Qatar is sending cargoes to Europe, it is a price taker. And it doesn't really, I mean, it matters, but to a lesser extent for Qatar, because Qatari gas can be produced for almost nothing. And most of Qatari liquefaction facilities are amortized and are, older compared to the one in the US, for instance. But still, Qatar right now is gaining market share in new niche markets elsewhere. I would like to spend a few minutes on US LNG coming to Europe. I think since the US first liquefaction plant, Sabine Pass, started to export LNG in April, only 2 cargoes made it to Europe. Why? Because the economics is not working. And there was a clear consensus view here also that Europe will be the favored destination for US LNG. I think that's still going to be the case, but we need to wait a little bit more. And it's going to depend on what other suppliers are doing, what's their strategy into Europe, and notably Russia with Gazprom. Because right now, US LNG is not in the money to come to Europe. Although the short-run marginal cost of US LNG coming to Europe is $4, and Russian gas is also $4. But in April, for instance, the average European price over April, May, and June was $3.75 in Europe. So, I mean, that was the FOB price for the US, and that was almost the price in Europe. So very little margin for US LNG supplier right now. One great news maybe coming around the corner for Europe is the revival of Egyptian liquefaction plants. Egypt has shut down its liquefaction facilities 2 years ago because of lack of feed gas, growing domestic needs, but in the meantime, Egypt has renewed its relationship with big producers, BP, Shale, and others, and huge discoveries were made. Those companies, those international oil companies, are fast-tracking their developments, and ramp up to production may happen as early 2018, which will lead potentially to Egypt becoming again gas self-sufficient and being able to re-export LNG to Europe, because historically Europe has been the main market for Egyptian gas. Another more remote supplier is the East Med. However, Israel has made headway, but mostly linking deals with its immediate neighbors, and we're still very far away from any East Med gas going to Europe. There is a plan, in the pipeline, but very remote, looking at exports to Turkey and then potentially reaching the Southern Gas Corridor and so on, but that's still very far away. So just to conclude, I think, the European gas market, and especially when it comes to LNG, there is an evolution. The political will is here to receive more LNG. But a few things need to happen. And also, we moved in Europe from, gas, the role of gas should not be taken for granted, to we have to fight back to make gas and LNG part of the energy mix. However, a few things need to happen. One of them is potentially a price on carbon. Another one is more unity between European members, especially when it comes to their positions toward increasing potentially the role of Russian gas versus the role of LNG. For suppliers, it means proactively opening up new markets, like the transportation. And finally, LNG prices have to remain reasonable low. Thank you.
Very
Nice to be here, as Jason said. First, I was here before, not in my current capacity, so very excited to be here. Thank you for coming and thank you for tuning in online. And thank you to the two previous speakers for their excellent contributions. Moving to New York gives you the ability to talk for 5 minutes about the Energy Union. That's what you get. But that's what I'm going to try to do. So I'm going to talk about a concept called the Energy Union that I think a lot of you have heard about. I didn't bring slides. I will next time. I'm going to do this in 5 minutes. I think I should be okay. So first, a very brief recap of what this concept means, or where it came from, and what it has evolved in today. Then second, flash forward, what we've seen emerge. And then finally, I would like to talk a bit about how we should think about, or how we can think about, ongoing debates about energy security, gas security in particular, in the EU, as has been alluded to by the two previous speakers as well. So first, to briefly recap. The Energy Union as a concept started off with a letter from then Prime Minister Tusk of Poland, sent in the fall of 2014, if I'm not mistaken, in which he essentially said, based on some analysis done by the European Commission, energy security is still a major concern in the EU, and I do not expect that this is going to be solved anytime soon, and implicitly he said, and I also am not convinced that the market is actually going to address this problem for all European member states. So in turn, he argued for the establishment of what he called a collective purchasing vehicle, which would essentially mean, that some vehicle would negotiate on behalf of all European member states favorable gas prices with, in particular, Gazprom, because that's the entity we talk about when we talk about energy security in Europe. It would, of course, run counter to more than 2 decades of institutional development in which European institutions have worked to liberalize markets and seek a diversion, if you will, between market actors and more publicly oriented actors who control infrastructure and those who design legislation and regulation. So it was really, it created a fuss. It created a lot of discussion. This sort of incentivized the creation of the Energy Union. When the current Commission under President Juncker came to power, it said, we're going to create an energy union, meaning we're going to complete the internal market and sort of finish this project that has been ongoing for quite some time. Now, it's worth noting that that's, of course, something very different than Tusk had in mind. Tusk said, I want to go back to the old days where we regulate everything and we're going to sit around a table and get a good price for my purchases, and that's it. That did not happen. So the Energy Union is much broader. It's a big umbrella which contains renewable energy and energy efficiency and all sorts of things. But for the purpose of this talk, and I think because energy security debates in Europe revolve largely around natural gas, or actually chiefly around natural gas, that's what I will focus on too. So the role of natural gas in the Energy Union. It's remarkable, though, that we only talk about natural gas because other fuel sources like coal and oil, also to a large extent come from Russia. We're not that concerned about those. So flash forward, what has been done under the Energy Union? There was the publication of a winter package, as it was called, in February of this year, which was a series of legislative documents. There was the LNG strategy that Leslie referred to. Its most important element, or on a high level, so the element being, we want to make sure that if we use the existing regasification capacity, which is indeed in place, if we use it and bring in more LNG, how can we make sure that that gas can flow throughout the EU? And that, of course, makes a lot of sense. That had been the bottleneck for quite some time, as Pierre discussed as well. It's not a problem in, say, 80–85% of the market. It is a problem, or it has been a problem, in particular in parts of Central and Eastern Europe, the Baltics, even though some progress has been made in recent years. So essentially, that's a positive approach. It mostly used existing measurements. So the European Commission has a pretty limited mandate to actually help construct energy infrastructure in the EU. This is largely up to the member states. And I think that's important to keep in mind, is that whatever not been done to date to complete that internal market, we should first and foremost look at the national level and ask policymakers in those countries why they haven't done what they should have arguably done 10 years ago, leave it on 5. So not a lot of new policy, if you will, but in essence, that is the right direction to go. How do we make sure that we use existing infrastructure to the best, in the best way possible, in order to make sure that everyone has sort of secure energy, has secure access to energy sources. And the second part of that winter package, a regulation on security of supply and an agreement on intergovernmental, and a regulation on intergovernmental agreements. Very somewhat debatable contributions in the past from those regulations to European energy security. In essence, the Commission says we want to make sure that we get a better understanding of government-to-government agreements. We want to be at the table. Preferably, we want to have a say about this. The problem, obviously being that this is not up to the Commission. It's up to member states. They all want to have their own say. It's up to companies often, and not even to governments. And so there's a lot of gray area there. And I know that Pierre, in his time when he was still focused full-time on this, has written about this too. We can debate to what extent those regulations have actually been helpful. They've given the European Commission access to a lot more data. That's the positive thing, I guess, you can get out of it. And so it's learned to better understand how this market works. Currently, some of these documents are still under negotiation, but they're making progress, and they should be completed somewhere by the end of this year, or if not, the beginning of next. So how to think about these ongoing debates about energy security in the EU? I think the glass can be either half full or half empty. You can argue that on a high level, the EU has been on the right trajectory in that linking all these markets together physically, making sure that all these member states implement legislation in the same way and have sort of the same regulatory framework in place, in essence, is the way to go. And I think there's actually quite a lot of evidence to support the notion that it is. There are a number of member states that were in trouble, say, a decade ago in most analysis, that are no longer. And that is not, and so I think it's important to keep in mind that what they did is, as Pierre alluded to as well, is they created options, right? So they either built a regasification facility, which allowed them to, at least if they wanted to, purchase liquefied natural gas, or they invested in interconnectors or reverse flow options so that they would have access to diverse supplies. So I think the strategy of those countries has been to create optionality. And I think that's something very different than, per se, banning or decreasing the share of Russian gas. And I think that's a fundamental misconception of energy security that we see in ongoing debates to date. Even though I think there's been a lot of progress, and as we've heard earlier this morning, supplies are fairly diverse in large parts of the EU. In other parts, there is at least increased access to diverse supplies. That doesn't mean that you're going to import less Russian gas. It's very competitive gas. So what it then effectively does, and we've seen prices sort of get closer and closer in recent years. So what it means is that additional supplies in the market put a lid on, or put a ceiling, if you will, on gas prices in Europe altogether. You're still going to import a lot of Russian gas, depending on the willingness of Gazprom to lower its prices, but it's shown so far that it's willing to do that and renegotiate existing long-term contracts. But the desire of the European Commission seems to be, no, we don't just want to create optionality and have affordable natural gas. We want to actually get rid of Russian gas, right? That seems to be the tendency, and that's a very debatable concept. And I think on top of that, another line of reasoning that is growing and important to appreciate is that in Northwestern Europe in particular, there is a growing tendency that we don't need investments in natural gas altogether, right? We can invest in renewables and we're good to go, and there's no need to further invest in fossil fuels. I think that both of these stances, as I said, are debatable, certainly to an extent. In Central and Eastern Europe, that obsession, if you will, with physically decreasing the share of Russian gas is problematic. I don't think that's the issue people ought to be striving for. If they have access to diverse supplies, then evidence suggests that actually they're in a good spot and their energy security concerns are no longer that valid. The narrative in Northwestern Europe that no new investments are needed and we're good to go with investing in solar and wind is debatable as well. There is a role for natural gas in electricity generation, certainly in the foreseeable future. There is a potentially growing role, as Leslie alluded to, in transportation. There's heating, there's residential and commercial usage, etc. So this is an issue that, and I'll stop here in a minute, where we want to spend more time in the coming months to better understand if we take very bold assumptions about the cost of renewables, if we take bold assumptions even about large-scale electricity storage, what does that mean for natural gas going forward? And is there a future role? My hypothesis would be yes, but I'm willing to be proven wrong. So that's something we're going to work on in the coming months with our colleagues. And yeah, I'd like you to stay tuned and look forward to briefing you by the time we have some results. Thank you.
Thanks. So we have still good. I appreciate everyone being timely. We have a good amount of time left for discussion and conversation and a lot of topics to cover. in European gas and beyond. Actually, I want to touch on a couple of other areas too. So, Pierre, let me start just by getting your reaction to what Tim just said, that the risk in Europe is not dependence on Russian gas, it's lack of interconnections and optionality, and that even with the kind of climate targets we talked about in Paris, again, that went into force yesterday, there's going to be a role, or needs to be a role, for gas moving forward. What did you think of what Tim said?
What Tim said was great. I'm some of the ideas originally put forward for this energy union are totally silly. It's still not clear whether they are still informing policy or not. Whether they really want to create this central procurement agency for natural gas, which, I mean, frankly, doesn't make any sense, doesn't serve any purpose, doesn't address any problem. I mean, they want to have a seat for government-to-government contract. There's no longer any government-to-government, gas supply agreement in Europe. It's gone, It doesn't exist anymore. So I'm not even sure what they're talking about, really. Apart from that, they've repackaged everything they've been trying to do or doing for 20 years, and they call it the energy union. Fine with me. I mean, there are aspects of European energy policy that have been great successes. Europe is the only place in the world, apart from the great Republic of California, where the price of carbon is actually above zero. And the European trading scheme, carbon emission trading is a great success. I'm certainly not in the camp of those who say it's a failure. I think it's a great, and it was a very unlikely success. There are aspects of European energy policies that have been total failures, and unfortunately, plan after plan, white paper or green paper, I don't remember. After green paper, they keep pushing for the same ideas. Let's mandate LNG. Let's build those pipelines to nowhere, between countries that actually, where there's absolutely no point for trading gas between them. Yes, creating optionality is always a good thing, but centrally planning pipeline expansion in Europe is not a good thing. So the market itself will build. If you have good market institutions, look at the North American example. I mean, the US example. If there is an economic case for arbitraging between two gas markets, the market will deliver the infrastructure. Well, in Europe, they've chosen a way to regulate gas transportation by pipeline in a way that makes it almost impossible to do that. They created national regulated monopolies from the very beginning. It doesn't work. Fine, and if it doesn't work, there are other options which might be much cheaper than building interconnections between all Central and Eastern European countries. I've mentioned LNG terminals. In some places, it will be backing up the power plants with distillate, whatever. So, I am against central planning, and because it doesn't work and it wastes capital, and eventually it also prevents people from doing things that they could do nationally that would address their problems. So, yeah, I think I will stop here. It's a mixed picture, but the way Brussels look at this problem is polluted by the foreign policy problems that we have with Russia, on the one hand, and on the other hand, keeps recycling the same failed ideas that have not succeeded over the years. Whereas I think they should just do away with them.
I should remind also people watching online that you can ask questions of our panel as well through Twitter, through the hashtag CGEP events, and our Twitter handle at Columbia U Energy. And then I will, in a really cool way, see the questions on my watch, and then I can pose them to our panel. Tim, Pierre said that he was hoping some of what he said would be controversial. He said things like removal of Ukraine in transit was a good thing for Europe. Nord Stream 2 is a very controversial pipeline. The US government has stated clear opposition to it. How do you view the merits of other pipeline routes from Russia to Europe?
Well, I certainly agree that many people would find that very controversial. But I'm not sure I'm one of them. No, I mean, look, this has been ongoing discussion, as you all know, and have been part of, to various degrees, ongoing debate in this nation's capital as well. And it's not just a topic that ranks highly among Washington think tanks. Washington policymakers like to chime in as well, in sometimes quite vocal way. I agree to a large extent. I was on a panel about 6 months ago, I think, with one of our colleagues in Washington, where there were a number of proponents and a number of opponents, as they were called, and I raised the question, which didn't get a good answer, I think. What purpose was served by maintaining the status of Ukraine as a transit country? Because the history has shown that it actually doesn't serve the country really well. It has, as Pierre, I think, rightly said, abused that position. There have been quarrels. That is not a one-sided quarrel, obviously, but it has clearly not worked in favor of Ukraine. And it's to date unclear to me why pushing to maintain that status quo, which has been problematic for Gazprom, problematic for Ukraine, and problematic for the buyers in the European Union, in particular in Central and Eastern Europe, why maintaining that status quo is something that is pushed for now by both European and US policymakers. And to date, that's unclear to me.
And is US LNG, Leslie, you talked about how people had thought it would come into Europe. Now it's not. The arbitrage window is pretty much closed, and Akos Loj, who's a scholar at the Research Center, has a paper coming out soon on kind of what the arbitrage for US LNG in the global market looks like, the competitiveness of US LNG. Is US LNG capping European energy prices now? And people have talked about a price war, potentially, US LNG and Russia in the European market. Is that what we should expect moving forward?
I mean, Europe is definitely a big beneficiary, whether it's received US LNG or not, because it's actually setting up a price floor, yes. But, I think the flexible model of US LNG makes it highly likable that we'll see US LNG coming to Europe because of swaps and trading and so on. So even if it's an Asian company that eventually going to send US LNG to Europe with some short-term arrangement with a European utility and different flexible trade deals that we have started to see in the past year and a half, I think Europe will see more US LNG coming to its regasification terminals. But again, it's going to depend also on what's happening elsewhere in the global gas market. And again, I think there is a tendency to underestimate the positive demand shock created by the current low LNG prices. And we started, prices have really declined over the past year and a half, but we're only starting to see now the reaction to low prices from emerging importers globally and even established demand centers that are looking with different eyes now at LNG. So all this will impact what comes to Europe from the US and elsewhere. And just quickly to react to some of the previous comments, I think the European Union is very aware that it cannot live right now without Russian gas. And whatever is being sent through pipeline is huge volumes that at this point cannot be replaced by any supplier. But the goal is not to increase this dependency on Russian gas. So trying to keep it at the same kind of level with increasing other alternative supply, and notably LNG. So it's trying to keep, a a status quo, and the big debate happening right now with the proposed new Russian expansion of pipelines or new pipelines, even if it's not new gas yet that has been signed with contracts, it creates facts on the grounds, because Russian building those pipelines will create, possibilities in the coming years if European gas demand increase, that, the infrastructure is already built, we just have to sign a new contract and it's there. So I think, on one hand, you have all those regasification terminals that are already built and underutilized. Why would you need to build new pipeline? The only reason is geopolitical, is because Russia has decided that it doesn't want to rely anymore on the transit of Ukraine and want to bypass Ukraine with new pipelines. But that's the only reason. There is no economic reason.
Pierre, you said Europe's not dependent on Russian gas in your conclusion slide. So where's the disconnect?
Yes. With all due respect, we've done back in my previous job at Cambridge, we did with a PhD student some fairly, extensive financial analysis of Nord Stream and South Stream at the time. So Nord Stream was being built when we did that. South Stream was still a project. Nord Stream is a completely profitable project. It makes a lot of economic sense. It pays for itself far more than pays for itself just by not paying the Ukrainian transit fee over 30 years. If you have additional security benefits, securing the gas relationship between Gazprom and its clients in Europe on top of that, then it's on top. But intrinsically, it makes economic sense. South Stream was more tricky. South Stream
But do you think there is a geopolitical element to the Russian motivation? Do you think that's true?
If Russia derives some geopolitical benefits, they come on top of the economic ones.
Okay. South Stream, you were saying.
South Stream is more tricky. South Stream only made economic sense if Ukraine defaulted on the 2009 transit contract. In 2009, they signed a 10-year transit contract after the crisis and a 10-year gas supply contract. If they defaulted on the transit contract and started bargaining again with Russia, then it made economic sense to build South Stream. Otherwise, at the prices that were agreed in 2009, it did not. But of course, Ukraine almost immediately started to bargain again. So they sort of created. They created the conditions that made South Stream profitable, or at least economic. So I disagree with that, and more, I think much more importantly, what is the problem with having more Russian gas in our European gas markets? We spent 20 years of painful political and regulatory work. It hasn't worked in Central and Eastern Europe, but it's worked quite well in Northwestern Europe, right? So we have in Northwestern Europe something that looks like an integrated, competitive gas market. Victory. Now people can compete. There's absolutely no foreign policy implications. If Russia wants to wage a gas war to keep US LNG at bay, fine with us. We derive the economic benefits and we have no foreign policy complications out of that.
So respectfully, the only reason why the EU and some Eastern European countries are looking at the issue on geopolitical terms is because Russia has historically used gas as a weapon and as a way to meddle into internal politics, especially in Eastern and Central Europe.
Well, they play hardball with Ukraine. They played hardball with Ukraine to achieve something that was perfectly sensible and I would even say unavoidable, which was to bring the prices in Ukraine at the netback parity with Europe. They did it in a very Russian way. I'm not going to deny that. But this whole narrative that Ukraine managed to sell to the entire world, that it was the young democracy being bullied by the ugly bear in Russia, it's just I mean, it bears very little resemblance with what was actually being done.
Maybe let's step back a moment and look at Russia's reaction to US LNG, for instance.
Yes.
It went from total denial of the shale gas revolution to paying lobbyists in Washington, D.C. to pretend that it's the worst environmental nightmare.
Yes.
Then it realized that in the European market, it was challenged by cheaper LNG and cheaper coal, and renegotiated all its contracts with Western European countries because they had the optionality.
Yes.
The only reason why optionality is great, because it creates better negotiation leverage in negotiations.
I agree with that.
So,
I presume you'll say that's a perfectly rational economic response.
No, but I agree with that.
Yeah,
I mean,
right.
the reason
You're
why...
saying that's not a problem.
Yeah. Sorry?
Your response to Leslie is that's not a problem. That's how economic actors respond in a market.
Yes, actually, by finally achieving some kind of an integrated competitive market in Northwest Europe, we created a situation that through commercial forces, market forces, forced Russia to completely change the way it sells gas to Europe. That's an immense achievement that did not imply any foreign policy implications and has totally changed both the way gas is sold to Europe by Russia, but also diluted completely the foreign policy implications of this gas trade.
And if the consequence of that is continued or even increased reliance on Russian gas, but at lower prices, that's markets working.
Exactly.
And Leslie, you think that's a problem?
Well, I think regulatory and geopolitics have played a big role because, the third energy package really put the framework together for Europe to create this optionality.
No. All of that was done under the second package.
The time frame post-Ukraine invasion created a momentum to think about what would be the impact of US LNG into Europe. All this created a huge pressure on Russia to adapt, to start selling gas on auction.
You get the timing completely wrong. The changes that transformed the Northwestern European gas market were all done implementing the second package. It's when the German government, for reasons that I don't know because I've not studied, maybe Tim could jump in here, the German government suddenly completely reversed its stance and empowered the federal regulator who eventually implemented the European rules on third-party access, and suddenly people who had gas, spot price gas in Britain, spot price LNG coming in British terminals, they could actually ship them to the German storages because they at last had access to the pipeline. Why the German government changed, I don't know. I've not studied that. But this was done in 2007, 8, 9. When you had the financial crisis and the ramp up of Qatar exports, which created this bubble of LNG around Europe. This is what triggered the renegotiations of Russian pricing formulas. It has nothing to do with the invasion of Crimea, and I think let's get to the bottom of it. I think there's a very strong case to be made that there is no energy security problem in Europe, but there is a strong case to be made that there is a security problem. There's a foreign policy problem with Russia in Europe that has to be addressed. But if you stopped consuming Russian gas overnight, you would not have progressed an inch in addressing your foreign policy problem with Russia. So, I'm not a security expert, I'm an energy expert, but people should start in Europe taking very seriously the fact that Russia is fundamentally not at ease, to say the least, with the security architecture that was put in place after the Cold War. And maybe we have to stick to what we've done and just to be prepared to be tough on Russia. Maybe we have to compromise. I don't know. But this is the problem that has to be addressed. Leave gas alone. We've solved gas several years ago. It works fine.
But you're calling for a division of Europe.
Let me let Tim come in.
Yeah.
So I have sympathy now for Lester Holt and the presidential debate moderators.
My microphone is not working.
and I also want to get to some other topics. But Tim, can you just kind of offer your perspective on this?
Brief. I'll not comment on the particular German case, but I think writ large, the timeline, that's correct. The problem, though, with some of the member states, and actually there were quite a few until not too long, is that even though there is European legislation that dictates, certain organization of markets and implementation of common guidelines, but that doesn't necessarily mean that all these member states also actually implement those rules. And that's something that not exclusively in Central and Eastern Europe, but also in Central and Eastern Europe, a lot of countries have, until fairly recently, struggled with. So third-party access is one example of this, and there are a number of other provisions that are important that are not always implemented. And it's hard for the European Commission to summon member states to implement legislation, even if it's formal. So these are directives, right? And so a directive essentially gives a member state a goal, which it is supposed to achieve by a certain date, and then it leaves sort of some sort of discretion to member states how they go about this. If they don't do it, there's a whole lengthy legal procedure. You have to go back to the member states, say, why didn't you do this? This takes years and years, right? You end up in European Court of Justice. You don't want that. But that has been a cumbersome trajectory regarding energy legislation writ large in a fairly large number of European member states. It's getting better, but that's cumbersome. I tend to think that the instruments that the EU has to help sort of build some of the bottlenecks that remain in Central and Eastern Europe, eventually they'll work. I do think that there's a role for European Commission in the sense that we know by now, that in a number of projects, and they're pretty much, they've been well documented, probably seven, eight bottlenecks that remain, the market's not going to solve that. And we sort of know that by now. And so then we can either go back to the member state level and say, look, guys, you have to be the first movers here. Governments in Warsaw or Budapest and elsewhere, you have to fix this. I think that's step one. But then if the European Commission can help there and use some of the instruments it has to sort of get people to the table and get those final investments done, then I think that's an important role to play. It's another role, and that's what it currently seems to assume when it wants to actually start regulating the supply mix. And that, I think, is a very wrong trajectory that seems to be prevailing now, and that has a lot to do with the broader security context that Pierre outlined.
So I want to open it up, but first let me ask, we're talking about the European market. Leslie said sort of, exports from the US were expected to go to Europe. Before that, they were expected to go to Asia, and now that's not happening. Well, it is a little bit, but not too much. And you've been looking at it closely, Leslie, the development of the Asian gas market and what's happening in places like Tokyo and Singapore. You are joining us from Singapore. So just say a word about your outlook for the Asian gas market and what that means for supply and price in Europe. Maybe Leslie and then Pierre. Briefly so we can get to questions. Yeah.
So clearly the Asian gas market is the fastest growing and evolving also. Japan, South Korea together are still about 50% of the LNG trade. However, they are mature markets. So right now, most of the supplier attention, where is the next round of big demand centers in Asia? They are looking at the big emerging economies, China, India, but also increasingly in South Asia, including, from Singapore, Indonesia, Malaysia, who are turning to become importers, but also Bangladesh, Sri Lanka. Clearly a series of new LNG importers joining the club. Some of that is driven by economic growth, but also increasingly by low prices and how those countries are opportunistically taking advantage of the current low prices and environmental considerations. And I think increasingly, the use of gas in big cities, in India, in Pakistan, is going to drive increased LNG use also. As those countries are increasing their call on LNG, it will attract more cargoes toward their areas and less maybe towards Europe. But again, right now we're in a very oversupply market, so Europe shouldn't be really fearful. But the question for Europe is how Europe will continue to attract LNG cargoes in the next decade when the market is rebalancing. Are they going to want to pay a premium price to attract those LNG cargoes compared to their competitors in a way?
Yes, what's fascinating in Europe is the now head-on competition between large pipeline suppliers, which now sell at spot prices, and the LNG market. I think it's the only place in the world where you have that. And given the geography, it really creates if not a global, at least a Eurasian, gas market, which includes, the LNG trade between, the Middle East, Africa, Europe, and Asia on the one hand, and the Russia-Europe gas relationship on the other hand. And actually, maybe the economic equilibrium will make that those LNG terminals in Europe will be empty forever, because when the LNG price is high in Asia, cargoes go to Asia. When the LNG price is low, Gazprom, lowers their prices and keeps LNG at bay. So you've got these incredible economic forces that are at play, whereby Gazprom is disciplined by credible threats of entry, that were created by a mix of regulation and market forces. But maybe those terminals will actually be underused forever. So the big new thing for me, everything that was said, I think is correct, fits with my understanding in Asia. The big new thing is these direct connections between the European hubs on the one hand, Russia's strategy and Asian LNG markets on the other hand.
And you said, by the way, you said these aren't the things you're working and thinking about now. So what are you working on and thinking about now? We have you visiting from Singapore, so tell us.
Well, okay, so I'm finishing a big study on something different, maritime insecurity and energy trade in Asia, from the Persian Gulf to the South China Sea. That's one thing. The other one is to think about what's going on in the oil market. Well, I started to publish on the structural impact of shale.
An interesting article about the impact shale is having on Saudi oil policy. We may have seen Saudi oil policy shift quite a bit in the last couple of weeks. Do you think that's true? And what impact has US shale had on that?
So just before that, the third thing I'm working on is the coming of age of environmental policies in Asia. So Asia is extremely carbon intensive because it's very coal intensive. The pressure for them to decarbonize, even relatively, will increase the Paris process and also internal political pressure from their middle classes. How will that translate to the competition between fuels and technologies via their environmental and energy policy choices? I've got a big projects coming up on this.
I hope you'll come back and tell us about it.
Yes, of course. I think we are. The point I make in the paper is that we are entering a new era in the oil market, because primarily of US shale, which is not very original, but also because of the Saudi and the low-cost producers' strategic response to US shale. And Saudi, they are facing a new large price-responsive competitor that will never cooperate with them. They are facing much credible threat to long-term demand for petroleum products, which actually create an incentive to monetize their reserves more quickly. So actually to produce more oil as opposed to cut production to defend the price. And finally, because they fear for long-term demand, they fear for their mid-term and long-term economic security, which I think is the driver for the economic transformation plan that they have launched, which there's not much about oil in the plan, almost by definition, because it's about moving beyond oil. But there is a reference price for oil, which is $30. And it tells you, it doesn't say that Saudi will aim at $30.
The reference price.
Yeah, they say that they've done the economic analysis for their transformation plan based on an oil price of $30. It doesn't mean that's their target for the oil price, but it means that clearly they want to put themselves in a position where they can live with a low oil price, and they also have to kill the expectations within the Saudi population that the good days can come back. let's cut production with OPEC, bring the price to $100 and let the rents flow again. It doesn't work. US shale makes that impossible now. And plus, you would accelerate the move to electric transportation, etc.
So you think part of the reason they actually not only didn't cut production but put more supply on the market
Yes.
and push the price down
Yes.
was as a catalyst to these economic reforms?
Yes, exactly. I think it all
So what
makes
explains potentially cutting production last week?
I think it's just a show. It's just, Saudi, there's a lot of pressure from other OPEC members who have been completely crossed by Saudi policy over the past 2 years since the price started to collapse. There's a lot of pressure also from some quarters within the kingdom who, maybe do not appreciate the extent to which the oil market has changed. So I think the Saudi leadership, it's an assumption, I cannot be sure of that, but I think they just pretend to go back to OPEC, play the old games. When it fails, and it can fail for a number of reasons, when it fails, they will turn back to their population and say, you see, sorry, it no longer works. We really have to learn how to live with the lower prices.
So let's come back to gas. I'll say just in response to that, because I was in Saudi a week or two ago, the part of the challenge is the time difference between when economic reforms like this play out and very real near-term fiscal pressures that they are under with where the oil price is now, that they recognize they are under a lot of pressure to try to turn around, both through raising non-oil revenue, higher fuel prices, water prices, potentially other taxes, and also potentially now we see getting the oil price up a little bit. Questions? David, yeah.
Thank you for interesting discussion. One of the things that struck me is there was no discussion of shale. Now, I understand that in this price environment for gas in Europe, shale doesn't look very attractive, but there are a couple of things that suggest that maybe in the near future, shale could be interesting again in Europe. There are more studies suggesting that there are regions where shale gas could be found. The competitive environment for gas in the United States has driven down the cost of producing shale, and the rise of political nationalist right-wing support in Europe suggests to me that there may be a move in public policy away from renewables and more towards the conventional things that nations have control over, such as shale prospects. So I wonder if you might say something about shale in this environment.
And Quadrilla, I guess, just got the green light this morning to move forward. Yeah. Who wants to take that? Tim, do you want?
Sure. I'd be indeed, this morning Quadrilla in the UK got at least the green light to go ahead and drill horizontally in the UK. That took about 3 years in total before they got to agree on the single. So, but it indicates I think the UK is at this point the only place where, and we'll see how this evolves because the public opposition in the UK remains very substantial and very vocal. So this is, even though this is a green light, and the current government, like the previous government, has been a full supporter of the industry, that doesn't necessarily mean this will fly, and that is the only place in Europe where it has a chance at this point. So there were at the time sort of very broad geological assessments that everyone went crazy about, that Poland was going to be the new Norway and all these things. Yeah, I mean, a number of companies, including US companies, went to Poland a couple of years ago. A colleague and I did quite a bit of research there in 2011, 2012. By now, all these companies are gone, and that has to do with disappointing results from test drilling, but also above-the-ground challenges. Rent-seeking behavior from authorities, challenges related to regulations, and so on and so forth. Ukraine was another interesting prospect, according to some. There were a number of majors in Ukraine as well. Logically, investing in Ukraine at this point in time does not seem like a very plausible idea. So I don't see anything emerge in Europe that looks like anything. I think the prospects for shale gas in Europe are very dim at this point.
Other questions? Yep.
Hi, I would like to bring into discussion Germany, because if Nord Stream 2 will be built, Germany basically is becoming a price maker in Europe. I would say it's not like only Russian gas, it's Russian-German gas. Germans are sitting in the Western Siberia and producing this gas. So basically 110 BCM will come on German shore. My question is how the rest of the Europe will feel about this, because Russian and Germans will be price makers, and how Germany will feel if political disagreements with Russia will continue, if there will be another provocation in Ukraine, on the borders of Estonia, all Baltics, and we actually still have problems with Syria. So how Germany will react on this? Because I don't think we can divorce economics of energy and geopolitics.
Who wants to take that?
Well, that really, back up why I think it's difficult to dissociate the economic arguments from the political arguments when it comes to Russia, because historically, when you look at all the relationship between Gazprom and its Eastern European and Central European customers, it has used gas as a political weapon in negotiations and so on.
When?
And right now, I mean, there is a list, that we can compile very fast. But right now, I think there is a distrust at the EU Commission level, but also, Nord Stream 2 has been highly divisive at the EU level and brings back all divisions between Eastern Europe and Western Europe. And clearly, the rise of, right-wing extremism that, you were mentioning earlier, everything has to be taken into account, because Europe right now is facing huge challenges, and energy has become a divisive issue on top of other issues that Europe needs to solve. And Russia has always thrived on EU divisions. So this is clearly something to keep in mind, and yeah, I agree with your points.
Do you want to have any response? Or okay.
I'll very brief. I'll be happy to. I appreciate that there are very different views on the role that Germany can or will play in the future. And obviously, I'm not going to deny that there's a lot of concern in Central and Eastern Europe about exactly that role. But I will also observe that Germany is already playing a role of being a transit state of Russian gas, and partly to Central and Eastern Europe, right? It was last year that through Germany, through Nord Stream 2 and Opal, over 30 BCM of gas was reshipped through Germany, and a lot of that went to Central and Eastern Europe. So on the one hand, there is a reflex in saying, oh, should that number increase, and is that good news? We have no evidence to support the idea that Germany is not going to be a credible shipper of gas to any part of the EU, including Central and Eastern Europe. So yes, that sentiment is there, but the data suggests that actually Germany can play that role, and I'm not sure whether shipping 30 or 60 BCM makes a lot of difference.
Any other questions? We have 1 or 2 minutes left. Did you want to respond, Pierre, to anything on that point?
Well, I think I've already said many things around this. So let's get other questions. Unless there is no question, then I will make a point. But
yeah. So we're at the closing hour too. So why don't you offer some closing observations?
No, I think Nord Stream 2 is a very suboptimal way of bypassing Ukraine. You've got a lot of Russian gas that is consumed in southern Europe, especially Italy, which is a big gas market, where it's extremely difficult to build LNG terminals. People have been trying for years and years and years, and there are many problems. As much as South Stream made sense, Nord Stream 2, I'm less sure. So my intuition is that if the so-called Turk Stream is really revived, then we will not see Nord Stream 2. Then I'm not sure what you meant by Germany being the price maker, setter.
It's more becoming ahead.
It's not countries that are setting prices in Europe, and the German government is not, making the pipeline system work. Sorry? But the prices on all Northwest European gas hubs exactly the same. TTF, NBP, the German hubs, the French hubs, all completely integrated now.
You're nodding, Tim. You agree with that?
Yeah, no, I agree. Sure. No, I don't see how. Yeah, because you're. I don't. What you're implying is that the Germans would set the price or change it as soon as it comes out of Germany, and that's not the case, is it?
if you have one or two supply, if you have only one or two supplier bringing gas to a hub, it's easier to manipulate. And in the past, for example, Norway or the UK have been able to withdraw or hold supply back and successfully lowering prices or bringing prices up depending on what they wanted at, NBP or.
That you don't
The,
have
pri-
one or
the,
two
pri-
sources.
the pricing power of
Final
the large,
comment, and we'll continue offline.
The pricing power of the large pipeline suppliers to Europe, be it Norway or Russia, exists, but is checked by the possibility to get spot priced LNG, right? To get LNG cargoes that are not contracted. So when the LNG market is very tight, this pricing power increases. When the LNG market is very oversupplied, like it is now, this market power decreases.
Great. So there's a lot more to discuss. We can keep talking about it for a few minutes now. We'll have you back again, hopefully, when you're in New York next.
Great.
To talk about this or other issues, and leave even more time for a really dynamic discussion. It's always interesting when there's disagreement on a panel. I love that. Mm-hmm. Thanks, all of you, for being here. Thanks to those watching online. And thanks to Pierre for joining us while you're in New York from Singapore. Thanks, Tim and Leslie, for being here as well. And I'll just offer a quick reminder about our events next week, an exciting week when we will have Brian Deese, Senior Advisor to President Obama, who played a key role in the Paris climate talks, again, which went into force yesterday. That's on Tuesday morning. And then U.S. Secretary of Energy Ernie Moniz on Thursday evening in Earl Auditorium on campus. So thanks all of you for being here, and please join me in thanking our panel.